As you probably know, I say you can always become a state. And if you're a state, we won't have a deficit, we won't have to tariff you, et cetera, et cetera. But Canada has been very tough to deal with over the years, and it's not fair that we should have a $200 billion or $250 billion deficit. We don't need them to make our cars, and they make a lot of them. We don't need their lumber because we have our own forests, et cetera, et cetera. We don't need their oil and gas. We have more than anybody.
It's very cheeky. I have told the Secretary I could always sell 2 million barrels of oil to someone else other than the United States if they would like us to.
The president says tariffs on oil are happening in just a few weeks at 10% instead of the broader 25%.
The gas sector is not strong enough, big enough relative to the size of the Canadian economy as a whole that even if the oil and gas continues to flow, that it's going to save Canada from a recession.
It starts with a line that shook millions. We don't need their cars. We don't need their lumber. We don't need their oil and gas. We have more than anybody. Those were Donald Trump's words, said confidently, said loudly, and said with the full weight of the Oval Office behind them. But the moment that clip played, something else began brewing thousands of miles away in Alberta, where a very different message was forming. A message that would hit America like a shockwave. Because while Trump was telling Washington that the US didn't need Canadian exports, Alberta's Premier Danielle Smith was in a studio in Washington, D.C. telling American journalists the exact opposite. Her voice was calm, controlled, but every word carried a threat that America has not heard from Canada in decades. I have told the Secretary, she said, I could always sell 2 million barrels of oil to someone else, if the United States would like us to.
Another question from the floor. I think I'd throw it to whoever wants to take this one. Trump's been quite clear that the U.S. must eliminate the trade deficit with Canada, given that most of this trade surplus is in oil and gas. How do you propose eliminating the trade deficit without impacting oil and gas?
Well, it's a little bit cheeky.
It's very cheeky.
I have told the Secretary I could always sell 2 million barrels of oil to someone else other than the United States if they would like us to. Because that's essentially the trade deficit. Yeah. If we directed, we have about 700,000.
For a country that relies on Canadian crude to keep its Midwest running, those words weren't just political noise. They were a direct challenge to the core of America's energy security. And for the first time in years, it wasn't Canada reacting to US pressure. It was the United States being forced to confront a scenario it never truly imagined. The supplier it depends on the most suddenly signaling it has other options. And that is where this story begins. Trump's tariff move, 10% on Canadian oil, with a threat of pushing it to 25%, was meant to pressure Canada into trade concessions. Washington assumed Ottawa would blink, that Alberta would panic, that the flow of oil would continue uninterrupted because the U.S. market has always been the only destination big enough to absorb what Canada produces. But numbers don't lie, and this time, those numbers tell a very different story. Alberta covers nearly a quarter of America's daily energy needs. Some refineries in Ohio, Pennsylvania, and the Midwest rely on Canadian heavy crude for as much as 90% to 100% of their operations. These facilities were built specifically for Canadian heavy oil, not light shale oil from Texas. They cannot simply switch inputs if the price spikes or supply drops. And when experts ran the numbers, the result was blunt. A 25% tariff on Canadian crude would push gasoline prices in the American Midwest up by about $1 per gallon. That's not politics, that's math. Even Ontario's premier joined the escalating pressure campaign, reminding Washington that in some regions the US imports up to 85% of its electricity from Canada. None of it, he warned, is guaranteed. That's when a simple truth emerged, a truth even US analysts are now saying out loud. For the first time in a long time, the leverage in North American energy does not rest in Washington. It rests in Alberta. Because if one province can shake the entire US system with a single statement, then the real question becomes, who actually holds the upper hand? The answer to that question becomes clearer when you look at what happened next. America assumed that Canada would be the one scrambling in the face of new tariffs. Instead, businesses across the US energy sector found themselves freezing investments. The uncertainty made long-term planning nearly impossible. American refiners worried. American transport companies worried. Even American traders began warning that tariffs weren't just a political tool, they were a destabilizing force. Canada, meanwhile, didn't just respond. It pivoted. High-level discussions inside Ottawa began shifting away from one simple assumption, that Canada would always export 97% of its crude to the United States. Suddenly that number looked risky, outdated, and strategically dangerous. And that is where LNG enters the story. While the US was arguing about tariffs, Canada was quietly accelerating a project that would reshape its energy future. LNG Canada Phase 1, in Kitimat, started exporting in mid-2025, more than 14 million tons per year headed directly into global markets. Shipments from Canada's Pacific coast reached Japan and South Korea in just 11 days. The same shipments from the US Gulf Coast take more than 20 days and must pass through the Panama Canal, which has become a bottleneck. The economics are brutal. Canada ships LNG cheaper and faster than the US in many Asian markets. And countries like Japan, South Korea, and even Germany, hungry for stable, long-term supply, see Canada as a reliable alternative to Middle Eastern uncertainty and Russian unpredictability. Ottawa understood the moment. What was once just an idea, diversifying energy exports, suddenly became a national priority. Phase 2 of LNG Canada is already drawing an expected $33 billion in new investment. Indigenous-led floating LNG projects along the west coast are moving through approvals at record speed. Another major project, Cedar LNG, carries an estimated $30 billion in investment and one of the fastest regulatory timelines ever recorded in the country. The message is unmistakable. Canada is preparing for a world where the US is no longer the only customer. A world where Canadian energy flows to whoever pays the best price, whether they are in Chicago or Shanghai. And this shift is not theoretical. The markets are already reacting. Asian buyers are lining up for long-term Canadian LNG contracts. European nations, still recovering from supply shocks after the Russia-Ukraine crisis, are exploring Canadian LNG as a long-term pillar of energy security. And investors, global investors, are putting billions into Canadian LNG projects because the political and regulatory environment suddenly looks more stable than the uncertainty coming from Washington. This is the part of the story many Americans never expected. Tariffs were supposed to squeeze Canada. Instead, they pushed Canada to diversify, invest, expand, and free itself from the decades-old belief that the US was the only reliable market. Meanwhile, the United States faces a reality it cannot avoid. It cannot replace Canadian heavy crude. Not today. Not this decade. Maybe not even the next. American refineries are engineered for one specific product, Canadian heavy oil. If that supply rises in cost or tightens even slightly, the pain hits fast and hits hard. Gas prices go up. Refinery margins collapse. Operational stability drops. And political pressure explodes. When Premier Smith said Alberta could sell 2 million barrels elsewhere, she wasn't bluffing. She was pointing to a global market where demand for crude remains strong, where Asian economies are expanding, and where Canada's reputation as a stable supplier is becoming a valuable currency. And Washington heard it. Loudly. Behind closed doors, US officials are now privately acknowledging what no administration wanted to admit publicly: tariffs on Canadian energy risk undermining America's own energy security. They risk pushing Canada out of the US orbit. They risk turning a loyal, predictable partner into a global free agent. And most importantly, they risk accelerating Canada's transition to LNG markets where American influence simply does not reach. In the end, the story of Alberta's warning is bigger than a trade dispute. It is the story of a continent rediscovering where its real vulnerabilities lie. The US believed tariffs were leverage. But the moment push came to shove, the world saw something else entirely. Washington needs Alberta for more than Alberta needs Washington. And as LNG projects rise along Canada's Pacific coast, as investment floods into Kitimat, as new export routes open across the Pacific, the balance of power is shifting. America may still be the biggest buyer. But Canada is no longer the country with no alternatives. The warning Alberta delivered wasn't just directed at Washington. It was a signal to the world that Canada's energy era is entering a new chapter, one where Asia, Europe, and global markets stand beside the United States, not behind it. The United States can try to pressure, negotiate, or threaten tariffs. But the truth is simple: once a supplier realizes it has options, leverage changes forever. And Canada has just discovered its options.